Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Anshu Malik, Managing Director and Chief Executive Officer, along with Mr. Shrikant Kanhere, Chief Financial Officer at Adani Wilmar, joining in. Welcome to the show, gentlemen, and a pleasure to speak to you as well. Every time when we talk about Adani Wilmar as well, right now, I don't think so a layman is actually aware that that's a brand that everyone's using on a day-to-day basis. I think the way the brand is perceived as is always with fortune. So I think this will be a good interaction as well for everyone to understand that it's Adani Wilmar who's behind the brand that we use in our day-to-day lives as well. My first question coming to you over here is, firstly, congratulations on achieving this key milestone with regards to where the IPO goes. If you could just first give us more details on the IPO front, how much money are we looking to raise and what's the breakup expected to look like?
See, this is a full primary issue of 3,600 crore. And the core object of the issue is 1,900 crore will go into the capex, which we want to build more integrated plant in the food segment. Around 1,100 crore will go into repayment of the debt, and 500 crore has been kept for the mergers and acquisitions. The price band has been fixed between 218 to 230, which is the top band. And the issue opens on 27th of January for the retail public and closes on 31st of January.
Right. And overall, what's the use of funds objective looking like?
So the utilization of IPO proceeds will go into the capex of around 1,900 crore. As I said, we would be building more integrated facilities to manufacture the food products, which is going to be the strategy of the company for next 5 years. And around 1,100 crore will go into repayment of the long-term debt, which is sitting on the balance sheet. So basically, post IPO, there will be no debt sitting on the company's balance sheet as far as the long-term debt is concerned. We have also kept close to 450 crore for mergers and acquisition in and around the food business. As I said, the whole strategy on company for next 5 years to build a food business, and therefore we would be looking out for inorganic opportunities as well.
Right. And in terms of the different segments of business between edible oil, industry essentials, food, and FMCG, what's the revenue breakup currently looking like? And going ahead over the next 3 to 5 years, how are we seeing it?
See, we don't look at exactly the revenue breakup. What we look at generally is the volume breakup, because our revenues are impacted due to inflationary pressure. And as we have seen in last couple of years, the oil prices were sitting on top, and therefore you get a revenues impacted due to high inflation. So what we basically look at the volume ratio, that how the business segments are looking like. So we have 3 business segments. One is, of course, the edible oil, where we are #1 player in the country. Food and FMCG, where we are the top 3 players in the country, and industry essential, again, we are the #1 player in the country. So edible oil contributes around 65% of the volume. 11% comes from the food segment, and rest of the 24% comes from the industry essential. Now, as we said, going forward, the whole focus of the company is going to be the food business, because edible oil we have done enough for last 20 years, and we have already become a very, very strong #1 player with a market share which is 2x of the immediate competitor. Our whole focus would be on food. And as we move forward, I think this 11% contribution of food will keep increasing. And this business is year on year growing at a 30% CAGR. So we hope that this should continue. And oil business will continue to grow at around 8 to 9%, and industry essential also will more or less do similar.
Right. So overall, when we are mentioning as well with regards to where fortune goes, it's the company's flagship brand, the largest selling edible oil brand in India as well. Especially when it comes to where the pricing front goes, taking into consideration the way oil prices have been moving lately, the kind of volatility that we are seeing, how does the dynamic work, especially because it's a MRP driven product?
every business goes through the inflationary pressure and every business is subject to all the commodity price rise which we have seen in the past. So as far as the Fortune is concerned, since it's a premium brand, number one brand in the country, most of the inflationary pressures our brand is able to absorb. So we are able to pass on all the inflationary pressure without losing our market share. And that's the key, and that's how we have been able to showcase a CAGR of 20% on our bottom line. Plus, our top line is also growing double digit for last 5 years. We hope that this trend should continue. I think we have already passed off the period of high volatility, high prices. The prices have already cooled off by 20-25% from the top. And therefore, we should be able to see a very stable market as far as we go forward. This is an MRP-driven product. After the government's intervention of reducing the duty, most of the edible oil players have dropped the prices by 20-25%. And I think the prices now should stabilize at this level, and the consumer should find it reasonably good to buy edible oil.
Right. And overall, if you see in terms of where the food and FMCG business go, as you mentioned, it's almost 11% of the volumes. Now, given that oil is a smaller part of the overall food basket as well, compared to say rice, wheat, sugar, pulses, how big is the potential to grow that market? Because clearly the kind of success that we've seen in the edible oil market, if we are able to replicate that in other commodities as well, that could be a huge success.
Okay, that's a good question. See, edible oil is only 22 million tons consumption. Per capita is better. I will tell you, per capita, 17 kilo per head. All of us consume at an average 17 kilo per year. Comparing this, sugar is around 22 kilo per head. Pulses around 22 kilo per head. Rice is around 51 kilo per head. And wheat flour is around 62 kilo per head. So when you see this basket of our daily essentials, oil is the lowest. So when you look at the total basket, today it is around 300 million metric ton. But the difference between edible oil and staples is that edible oil is around 75-80% branded and packed. Whereas staples is only 10 to 12% branded. So the scope of changing from loose to pack is 90% open. So anybody getting into it, the volumes are 10 times bigger than edible oil, and the opportunity is 90% more. So one can imagine what can happen if the country starts buying packed sugar, packed dal, besan, and your rice and atta. Then what will happen in the next 5-10 years? Now, India is a very young country. 85% of the population is less than 45 years old. Now, all these people their income is going up, education is going up, and the concern for good product, healthy product, packaged product, hygienic product is surely increasing. We have seen that happen in COVID much more faster. So you will find people are ordering through e-commerce grocery, which was not the case 2-3 years back. Today, most of the middle class in our households wants to order grocery through e-commerce. When you order through e-commerce, most of them go for a brand which they know, which they're accustomed to, or they have used the brands. So national brands like Fortune have a great opportunity to be in a pan-India player and provide the supply chain to across the nation. So the opportunity for AWL and brand Fortune is huge. We only have to be very sharp in our buying, in our processing, in our supply chain, and in our R&D. These are the 4 basic pillars on which the organization stands, and on this, the business will stand. We have a head start over others. One, there is a brand Fortune, which is accepted across the world, across the country, and goes at least 1 out of 3 households. That is one advantage. 2, we have a distribution lineup, which is the largest in edible oil. We reach around 1.8 million outlets. So you have 2 advantages with you, and you have 5,500 distributors. So with this infrastructure, you only need to put good quality flour, good quality maida, good quality dal, and then pass it on to the retailers. Now, 65% of the distributor is common. They handle both oil and food. Salespeople are common. So across the chain, we have a lot of synergy. And that synergy makes Adani Wilmar different than any other player in the country.
Absolutely. And with all of this, how is our distribution channel looking like from here on? Because currently we already have a network of distributors. We've started our own digital channel as well, launched retail stores. There is an app for B2B customers. So what is that breakup looking like, and where are we concentrating in terms of majority of the revenues to flow in from?
See, one is that we already have a network built over the last 20 years. We have total 22 our own and 28 toll units. So total 50 manufacturing locations in the country. These manufacturing locations, along with 90 warehouses in the country, these are the stock points from where we dispatch stocks to our distributors. That is one. 5,500 distributors, 65% common, handling both edible oil going to the same outlet. Now you will find there is a distribution fit. Same distributor, same retailer is selling to the same customer. So the customer is also same, who wants sugar, who wants rice, who wants oil. So we have end to end, there is commonality of the requirements and the chain is common. Second, to augment the demand, we have started Fortune Online. Now Fortune Online took birth around 2 years back after the COVID, when a lot of people asked us from where can we get your products. So we would then give them supply at the apartment complex. We will go and put our van there so that they can buy from there. But then we started our Fortune Online in 25 cities. And today we have a good traction coming, almost 100,000 people getting into that and getting into our Fortune Line app. And every day we are adding more and more customers. Now, going ahead, e-commerce is going to be a big business that is online. So whether it is Amazon or Big Basket or all this, we are number one player there and we are pushing all our products through them. We have a very good supply chain network because these institutions want perfect delivery, perfect supply chain, perfect product chain, and they want quality consistency across. So they rely on companies like us. So we have that advantage. So we are pushing through them. So overall, we are present through all the type of channels that you can think of.
Right. And overall, if you see in terms of where growth goes from here on, between urban and rural, how is that breakup looking like? And a step forward between exports and domestic, how is that looking like?
So first is domestic market. Our share of edible oil is roughly around 39-40% comes from rural, 60% comes from urban. When I say rural, at Adani Wilmar, we define any town less than 1 lakh population as rural. So this is our definition of rural. So anything less than 1 lakh population is 40% oil, because oil penetration in rural market has been growing very, very fast. Now, when it comes to staples, branded staples, this depends on what type of product, but ideally we have seen between 25 to 30% comes from rural market and 70% comes from urban market, because the branded staples demand from urban market has been higher than rural. But I'll give you an example. 49% of our basin business of half kilo and 1 kilo basin comes from rural market. So when you look at a rural consumer, she is surely looking at aspiring like any other urban market, and she is buying branded basin. So 49% of our basin comes from rural market. Similarly, around 25-28% of atta business, chakki atta, comes from rural market. So different types of products have different penetration level, but surely 25-30% is the branded staples market. Now, when it comes to export, our total volumes export as a company, we have around 4,000 crores export business, which mainly is castor oil, because we are the global largest producer of castor oil. We are top 3 oleochemical exporters from the country. We are the top stearic acid producer in the country. We are the largest glycerine manufacturers. So we export these products abroad. So this plus our rice, basmati rice, non-basmati rice, our atta, our edible oil, these are all exported, which constitutes around 4,000 crores business. So that is how we.
Right. Right. So from here on, would it be right to say that the focus will be on expanding high value products?
Surely, as we put the staples basket and streamline the product quality, consistency, and supply chain, the next stage is to get over this. So the first product will be rice. We have started value addition by do-it-yourself biryani kit, because consumers during lockdown, I have seen a lot of people like us have become chef. So they need something by which they can cook at home. So biryani kit is coming. We have introduced khichdi in different varieties now, at least 6 of them. For children, I have put pav bhaji variant and Mexican salsa variant. So it will be different khichdi, but name is khichdi, but the type of product will be different. Similarly, we have put poha upgraded. We have put Indori poha and all that. Other products that we are working on, fortified rice, we are working on low GI rice, multigrain atta, sharbati wheat atta, then high protein atta, and like this, one by one product it will go. Pasta, noodles, these are all there in our pipeline. We are working on it. So once the staple part is ready and when your raw material is good quality, world-class quality, surely adding more products over it will take AWL through in this business.
Right. And overall, in terms of manufacturing as well, what's the blended utilization that we have? Because we do follow an integrated approach towards where we manufacture both food and oil at the same location.
See, what differentiates us from any other similar kind of companies are that we have integrated our operations. Now, when we say integrated, when we have soya bean, we crush the soya bean. The oil goes for branded Fortune soybean oil. The meal, we make soya flour. Then we make soya grits. Then we make soya lecithin. Then soya nuggets and soya beans. All these products end to end. So the same factory from soya beans will give you different type of products. Similarly, in a refinery, palm oil refinery, we have stearine and PFAD as a byproduct where oleochemical is put. So oleochemical plant helps in making stearic acid, glycerine, soap noodles. Then from soap noodle, we make toilet soap. So we are selling toilet soap also in 60 gram, 100 gram toilet soap. Now this is one integration. Second integration is specialty fats. From the same plant, we are making specialty fats, lauric fats, meant for chocolate industry, meant for ice cream industry, meant for frying industry, meant for baking industry. So this is another value addition line in the same plant. Then comes rice, then comes wheat flour, then comes pulses. So what we have put in some plant, like Alwa, example, we have put chana dal besan plant because Rajasthan produces good quality chana dal. Similarly, Madhya Pradesh, Neemuch, Nagpur, Maharashtra, the other places we have put chana dal because Maharashtra has good quality of chana dal, so we make besan there. Similarly, in Firozpur, we have rice. In Mundra, we have put rice for export. So like this, different places, we have integrated food and oil, so that we get synergy of operation.
Right. And overall, if you see in terms of where growth goes, you've recently acquired Bangladesh edible oil as well. How important is acquisition going to be as a part of our strategy from here on?
See, Bangladesh edible oil is a very similar like Adani Wilmar in India. They have 2 factories there. They have a distribution through 550 distributors. There is a brand Roopchanda, which is our brand there, which is number 2 brand. Like Fortune here, Roopchanda is number 2 brand there with 25% market share, distributed across more than 2 lakh retail outlets. 2 lakh means out of 5 lakh retail outlets, Bangladesh has 2 lakh retail outlets. We are present with Roopchanda. And we are also selling basmati rice. We are exporting from here. Fortune basmati rice is number 1 there. Then we have other rice like Baskati rice, Miniket and all that. So they are also putting more and more food products into it. Bangladesh is 17 crore population, which is growing very fast. economy is building up. People are very, very becoming health conscious. And it is very similar to what India was 15 years back. So only 20% is branded edible oil. So they have 80% scope to grow. So we see a great opportunity in Bangladesh. In the next 10, 15 years, it will become a very big market and a very good market.
Right. And any other acquisitions that could be on the pipeline?
We have kept around 450, 500 crores for acquisition. We are continuously studying options available, either brand acquisition or asset acquisition or company acquisition, or even strategic investment in companies which have got related business, but where we feel the owner can do a better job. We can only help him in distribution or brand building. Rest manufacturing or sourcing or technologically, he understands the business better. We will surely partner him. That is one option. Second option is that you take a brand which is local, but I can take it global. So that is how one can think of.
But the more mergers and acquisitions are more into a food segment rather than
Absolutely. I think the roadmap looks pretty strong because what we've achieved as a brand in terms of the FMCG segment in the last 10 to 15 years has been spectacular. Thank you, Mr. Angshu Malik, as well as Mr. Shrikant Kanhare for joining us on the show. Pleasure to speak to you, get insights from you. Good luck for the IPO. Stay safe and speak to you soon again.
Thank you.
Thank you.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.